or important, and time will tell whether or not they end up being important down the road. That's a general rule. They should, assuming that we even get back there. So let's take a look at these areas. Obvious resistance, support. I'm going to make that $15. 9 here being support and resistance, and 4.5 being resistance multiple times. Let's go ahead and make this. This looks like it's going to be roughly $20. So there it is. Okay, so here's the thing. In a situation like this, it's a new market. It's a relatively new market, so it's difficult to get overly excited about too many of the longer term setups, obviously, unless you're an investor and you're willing to hold on to it. Obviously, you've done quite well. But let's take a look at this candlestick here. Notice how the volume picked up again as we broke above this 450 cleanly. So if you're more of a longer term investor, that's a signal to start buying. You could put your stop loss maybe at 440 or so. There's no way that you could have known, hey, in the next few weeks, we're going to get all the way to $20. You do have a little bit of action here at 9, though, that was resistance, and it should be support. And you can see we formed this hammer here, which was a buy signal, just like this one was. When a market, and remove these candlesticks, but when a market does this, it's in an uptrend, so you shouldn't even be looking at selling. It's either you are long or you are on the sidelines. Long meaning buying. So let's go down to the daily. So look at this big, huge, bullish candlestick that broke above the $9 level. This was part of that hammer on the weekly chart. Nice volume. Certainly shows that there is buying interest. You just put the stop loss on the back of it. You had a couple rough weeks, and then eventually it took off. Let's put our Bollinger Band indicator. Notice how this same area, we had broken down below the Bollinger Band. So that was a sign that we were probably going to at least revert to the mean. But with it being significant support, it's not overly surprising to see that the market pulled back. This would be against the grain here, against the trend, but this shooting star is a negative sign, and we did reach the other side of the Bollinger Band, bounce up, and then broke down back to this major support level. So that's worth paying attention to. I'm going to drop down to the hour rather quickly in this video, just simply because, or you know what, I'll even do 4 hours instead. Just simply because we don't have enough history to really delve into it without looking more on the shorter time frames. It's hard to get a feel for a market when you only have a year's worth of data, unless you're looking at short term. There's a hammer there breaking through the Bollinger Band. Nice bit of volume there. Touches this area here, which was previous resistance at 18, and then rallied. So that's a nice setup. Same thing here. You formed a hammer breaking through the bottom of this Bollinger Band setup. Not as impressive volume-wise, though. So, it's the right idea. It's the right trade in the sense that we're in an uptrend, but it's not as big of a possible setup as some of the previous ones were. So, this is an interesting setup because this hammer formed right here where we had seen support, and we were way overdone. We ended up rallying quite nicely for a nice recovery. Longer term, that trend did reassert itself, but you clearly had an opportunity to make some money. Notice how the recovery, once we broke out of the Bollinger Band, if you remember where it was in the last little bit I did, it was at the 61.8 where we formed. I struggle to call this a hammer because the real body is a little too big, but breaking down below it does show a change in attitude, and you can see clearly you got back down to the bottom. So certainly something worth paying attention to. So here is a setup based upon Fibonacci. Reached down towards the 50 and then took off to the upside on a hammer. Nice little setup. I also see a bit of a descending triangle here, which actually went profitable for a while, but then failed. We went back up to the upside. So probably would have either gotten taken out for a small loss, or perhaps you move your stop loss to break even once it retests that area. I mean, clearly you had an opportunity to make some profit. Would you have taken the profit there? Maybe, maybe not. But I wanted to show you that not every setup works. And that's something that you do need to understand. While you can find a lot of profitable setups, sometimes things happen in the market. They just happen. It might be news flow. It might be, just a random event. Maybe it's just a big player coming in to remove, their positions, and it moves the market against you. It just is what it is. But that's what your stop loss and your money management, regimen is for, on the occasion that something doesn't work out. So here's a symmetric triangle. We break out, we come back and we test it for support. We rally, we almost get the target. I mean, that's pretty close. We come back, we test this area again, nice hammer, and it goes back up, and you finally fulfill, without any doubt whatsoever, that setup. So let's put the MACD on. Notice how we got up here at $15, formed a couple of shooting stars in a row, had this MACD cross. I don't know if you would have shorted this, but clearly if you were long, that would have given you plenty of opportunity to get out, because you would have gotten bearish or at least warning signals. Just like this MACD crossover here, right here at support, take this trade up until it crosses again. Pretty straightforward. This is interesting. There was a little bit of a divergence. And that did lead to a breakdown to here, where we formed a hammer and then eventually crossed to take off to the upside. So, I hope that you've seen plenty of examples that make you realize that this is the type of analysis you need to do. Quite frankly, you can do this with any market. But I would definitely encourage you to go out and look at all the crypto charts on various time frames that you can. Start on the weekly time frame and work your way down. It builds confidence. It builds that muscle memory of identifying setups. And then it also, it shows you how trading works in the real world. You want to see a couple of reasons to be involved. You don't fight the trend. Is it with the trend? Is it at support or resistance? Those are your first two questions. Do you have another indicator, maybe a Fibonacci level or an RSI reading that gives you more confidence? Maybe you have a triangle forming, at least three things, and then you can start